everyone see my screen now?
Yes.
Oh, great. Today, we're going to talk about the holistic safety stock optimization. I will explain exactly what is holistic. And we are putting horse before the cart, which is natural. Horse here means budget or total value of safety stock as a whole. And inventory means the cart. This is a natural state, right? We want to pull the inventory by a horse, not the other way around. Let me briefly introduce the company. Freation Analytics was founded by me 2 years ago. We offer holistic inventory safety stock optimization as a service to help clients increase their return on investment for the whole inventory. And our other products, including DS Optimizer and the Visual Planner. Let's start with safety stock. Safety stock is extra inventory we keep to handle the uncertainty in customer demand. And safety stock is determined by 3 factors: demand satisfaction, lead time, and the standard deviation of demand. And we all know this curve on the right, it describes the DS, demand satisfaction, and safety stock. The higher the safety stock, the higher the DS. As DS approaching 99%, the safety stock increases quickly. The value of safety stock is simply the multiplication of safety stock and the unit price. How do we determine the DS to optimize the whole inventory? There are 3 commonly used approaches. The first approach is ABC analysis. This takes advantage of 20/80 rule. This rule surprisingly works well for many businesses. Usually, we have only 20% of items that account for 80% of the value, and we put them in group A, and we think we should assign a high DS for group A. Then we have the next 20% of items only account for 15% of the value, and we assign a medium DS for them. Then for the remaining 60%, the majority of the items, they only account for 5% of the revenue, and we can assign a low DS for them. This is what is done in many places. Does it make sense? Another approach that I have seen is in a big company. They use value of item and the volume of item. They define medium, low, high for both value and the volume. So we have 9 cells defined by these combinations, right? If we look at the lower right cell, the green cell, it's a very low value, but it has a high volume, a lot of sizes. And that means we can afford to assign a high DS for them. At the same time, we make a customer happy because there are a lot of business in terms of volume. On the opposite, it's a blue square on the upper left. It's a low value, it's a very high value, expensive item, but has very low size or volume. So we don't want to store a lot of expensive things there. we assign a low DS there. A better approach than matrix is to use a clustering approach, like a k-mean clustering, because those items naturally they form groups in this value and volume plane, right? So we automatically identify those natural clustering, and we can deal with each clustering using our intuition or experience, like we described before, right? If they are low value, high volume, then we assign high DS, something like that. And this works well. And I did this work for a company, and they liked it a lot. Anyone can interrupt me if you have questions. You can unmute yourself. What's the problem with the current approaches? There are at least three. First, lead time and standard deviation of demand are not considered at all in this approach. But we know lead time and standard deviation determines the relationship between DS and safety stock. We should not exclude them from consideration, right? The second problem is that with this approach, we really start with inventory, right? We look at hundreds of thousands or even more items, we assign DS to each item, right? We start with that process. And then once we assign the DS, we calculate the total safety stock by adding the safety stock for individual items, right? Once we have the total safety stock, then we compare with our budget. If it's too low or too high than our budget, then we have to go back to step one and adjust the DS. It's a tedious and very slow process. And the order is reversed, right? We have inventory. We work with inventory first, and then at the end, we have a budget. We can compare budget with our safety stock total value. There got to be something wrong with that process, because as a business executives, the first thing we think is money, right? We want to spend $55 million on those inventories. Then how to allocate those money to each item? We should start with money. The horse should drive the inventory. This is an important consideration. But more importantly, those approach do not optimize inventory as a whole, right? So let me define, what do we mean when we look at the inventory as a whole? Actually, it's surprisingly simple. Two numbers. One is total safety stock for this inventory, right? Another number is average DS for this inventory. So we keep in mind those two summary numbers are critical. Let's show you these two charts we compare. On the left side, we have a single item we're all familiar with, right? In this single item, the DS and safety stock value, they have one-to-one relationships, right? If we increase DS, we have to increase safety stock. That relationship is monotonic. It's certain. But when we talk about inventory level, the average demand satisfaction and the total safety stock added together, we have a right chart they are everywhere. There are many-to-many relationships. Basically, we can have very high value inventory, but their average demands, their satisfaction level is also low. Right? This is very counterintuitive. We spend more money and we have a lower DS. So this is why it's very confusing and difficult to optimize the inventory as a whole. Maybe because we don't have an effective way to do this. But actually there is. I give you an example to describe this many-to-many relationship at the inventory level. So we have a very simple 10 item inventory. These are real. I have a LinkedIn paper. I give a link to this spreadsheet. So only 10 items in the inventory. The top one is the baseline settings. Just like we do always, we assign a single DS for every item in this inventory, 91% in this case. If we do that, we have 130,000 total safety stock value there. Right? Actually, we can plot this baseline settings in this